Hey, what's up, guys? I just wanted to give an update on the whole Celsius fiasco that's going on right now because there's a lot at bay here. There are so many people out there that are hopeful that they're going to get their money back, but have no idea what's going on with the whole situation. And so I wanted to shed a little bit of light, put some of my 2 cents on what's going on, and really explain in detail everything that we've seen thus far leading up to this. If you look back at last September, Texas securities regulator adds Celsius to its crypto lending crosshairs. What that was an investigation into securities laws and how it affects these crypto lending platforms like Celsius, BlockFi, Nexo, things like that, that could potentially run the risk of being a securities platform, but not listed as such. So Texas took it on itself to look into that. Just yesterday, they opened a new investigation into the Celsius Network's decision to halt customer withdrawals. On June 12th, the crypto lending platform published a blog post announcing that it would pause withdrawals as well as its swap and transfer products, citing extreme market conditions. Well, there's some people on Twitter with their own concerns. One user posted, "Dude, they took your crypto to avoid liquidation on their own loans. That is the reason they can't allow withdrawals, as there is nothing to withdraw, just fake numbers on a screen." And that is cause for concern. Are they insolvent? Have they become insolvent? Do they have enough money to pay their current loans and allow people to withdraw funds? Are they worried that if they were to allow withdrawals, that there would be a bank run, and that's why they stopped withdrawals? These are a lot of questions that are going on right now, and people are scared. People are terrified. Something that I want to bring up, though, is a post that was made on Twitter as well, really detailing the fine print of things that people should know before they invest in something like Celsius. This is bullet point 3 in their user agreement. In the event that Celsius becomes bankrupt, enters liquidation, or is otherwise unable to repay its obligations, any eligible digital assets used in the earn service or as collateral under the borrow service may not be recoverable, and you may not have any legal remedies or rights in connection with Celsius's obligations to you other than your rights as a creditor of Celsius under any applicable laws. So basically what they're saying is, if you want to take us to court as a creditor, you can do that. Otherwise, you have no rights to these digital assets once you give them over to us. That's scary. I mean, there are people that are making references to the whole Mt. Gox situation and the similarities here of what happened there. As you all might know, Mt. Gox went into litigation years after its failure and demise, and some of its investors got paid back, some of them didn't, and I don't think that anybody got back what they initially had put in to Mt. Gox. So there is that fear there that if they were to go into litigation, if they were to go to court for going insolvent, going bankrupt, or whatever, and having to pay back its creditors, people might not ever see their full amount that they put into Celsius. And on top of that, they might not see that money for years to come, which is really scary, because the whole reason for this Texas investigation that's going on right now is because a comment by the Texas State Securities Board Director of Enforcement. He said, "I'm very concerned that clients, including many retail investors, may need to immediately access their assets, yet are unable to withdraw from their accounts. The inability to access their investment may result in significant financial consequences." And that's the truth. People put that money in there as a way of creating some sort of savings account, thinking that if they put that money in there and they're earning interest on it, it's better than holding it in a bank, right? In a traditional bank, at least. And they thought that those assets were liquid, that if they needed to pull them out, they absolutely could do that in a very timely fashion and have those set aside just in case, right? But if you cut off the withdrawals from people being able to access those funds, then that's not really the case, is it? Yesterday, or maybe 2 days ago, Celsius hired Citigroup to advise on the next steps that it should take. This is on Blockworks. The cryptocurrency lender has brought on the traditional financial bank in an advisory role, the Block reported on Wednesday. While Citigroup won't directly provide any funds to Celsius, and that's important. So this is just an advisory role, and they are paying Citigroup to do this advisory role, right? They're paying them. Citi is not offering any financial aid to Celsius. So they're using their investors, their creditors' funds to pay Citigroup for this. Which, where are they even getting those funds, right? If they can't even offer withdrawals for their users, where are they getting the funds to pay Citigroup for an advisory role? Those are really great questions that we should be asking. In addition to its advisory role, Citigroup will reportedly help Celsius evaluate offers, including one made by rival lender Nexo, which formally approached its competitor to buy some of its distressed assets at the time Celsius signaled liquidity issues. Nexo told Blockworks it was aware Celsius had trouble with its withdrawal obligations, and its findings pointed to the unsustainability of its business, even before the lender publicly admitted to it. There are a lot of issues with the management of the funds with Celsius that I will not go into in this video because it would take way too long to break down the issues with the staked ETH, the ETH 2.0 tokens that they have staked currently that are not accessible, UST, Luna, things like that were being managed under Celsius that had to get liquidated. And the fact that they were able to say with a straight face that they were investing in safe things to its investors, it's all just such a nightmare right now, guys. And it's really sad to see because even my mother invested in this. It's just sad to see that something like this could come of the crypto industry because we all want to see something like this thrive and survive and be successful. But at the same time, we have to remember the roots of cryptocurrency, being your own bank, holding the keys to your funds, right? And that's not the case with something like this. This basically is a digital bank for crypto, and they marketed it as something other than that. And that's why a lot of people felt like it was safe, right? That, if I give my money to these people, then they'll invest in decentralized finance, which provides a nice yield, which is much higher than what you could get in traditional finance, right? Moving forward, I think the smartest thing to do is either invest your money in Bitcoin and just hold it for a long period of time, or invest in proof of stake algorithms that like Ethereum is moving towards, create those rewards through the inflationary assets that are created from that proof of stake algorithm. Things like that are going to be much smarter than giving away your crypto assets to somebody else and saying, here, hold these for me, and I hope that you give me a return on the assets that I've given away to you, right? Because we don't know. We don't know what people are doing with our assets whenever we give them away to products like these. I really do hope that they can solve all of their issues that they're having and pay back their investors, their users, their creditors. I really do. Because anything other than that is a straight failure. And on top of that, if it does go to litigation and it finds that they are insolvent, that they can't pay back their own loans and they can't pay back their investors, their users, their creditors, then it is going to have a huge negative impact on the market from what we've already seen with the Luna crash. And it does kind of feel like 2018 again. It's one thing after another. Back in January of 2018, we had the whole BitConnect fiasco. Then we had a lot of other things that kind of made the market continue its downward trend for a couple of years. I kind of feel the same way now. It's one thing after another that will cause this bear market to worsen. And again, I really hope that they can pay back their users. That is honestly the best case scenario. Look, if they have to go bankrupt and default on their own personal loans as a company, whatever, but pay back your investors, pay back your users. That should be your first priority. Anything after that, let the chips fall where they lay. That's what I wanted to talk about today with you guys. I really hoped you enjoyed today's video and maybe got a little bit more insight on the situation that you didn't have before. If you did enjoy it, please hit that like button. And if you haven't already subscribed, please do so. It really helps my channel grow. That's going to be it for this one, guys. Crypto Clay out.